Yeah, I mean, historically, it's very unusual to stay at this level for more than a few months. So some peaking was inevitable, but I think that peaking is going to happen in the third quarter. So we may still have a little bit more to run here. Our GDP forecasts are such that you're going to see an acceleration from Q2 to Q3 in the euro area. So I think the demand side, it's still looking good. We saw those German employment numbers from the PMI, record job creation in July as firms taking more and more staff on. That's going to feed through to better consumer spending. So still a bit more on the demand side to go, I think. The big question is those supply constraints and the extent to which they feed through to higher prices, which could obviously deter some demand spending. We've got, both in terms of manufacturing and services, very strong rates of increase of costs feeding through to higher prices now. And that's not something that seems to be going away. These supply chain delays, a lot of it's to do with sourcing materials out of Asia and so forth. And what we're seeing there is the Delta variant. It's curbing production and shipping lots of key components out of Asia Pacific through to Europe. And that's just not going away. We hear, stories like these, the semiconductor shortage could last till 2023. Now, the concern is the longer those shortages persist, the more companies are going to have to pay more to get those inputs. And those goods prices are going to rise. Now, the longer those goods prices rises, the more chance you've got of that wage price spiral kicking in as well.
Well, if you're wearing your central banking hat, I'm guessing that you would not be categorized into the transitory camp then, based on what you're saying. But I do want to ask you about any possible transmission that you're seeing from producer prices to consumer prices at this point. Is there any spillover?
Oh, definitely, yes. But again, whether it's transitory or not. So we've got these good prices spilling over to service sector charges. They're rising very sharply again in July, because whether it's food, whether it's transportation, lots of costs of goods and transport feeding through to higher service sector charges. That's very evident from the survey now. And we can see that not with these flash data, but with prior data, that the consumer, especially for goods, prices rising very sharply. Not as much as you've got, say, in the US at the moment, where you've got more stimulus helping to boost demand, but it's definitely on the increase. Now, the big question is just how transitory is it? It's feeding through to CPI. We expect CPI to, we had a dip in the last numbers, probably going to start accelerating again. But our central forecast, you mentioned about the central bank, is that this is transitory, but the concern is as every month goes by, there's a little bit more evidence to suggest it might not be quite as transitory as we thought. So it's all to do with supply lines. So keep your eye on those supply chain delays and just how persistent they're looking, because that's going to be a key to how long goods prices stay high and the chance of that feeding through to wages.